Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay, so we've engaged the lower Bollinger Band here on the daily chart. That's after spending 7, 8, 9 sessions underneath the middle band, the 20-day. Bulls had plenty of chances to try to get that middle band back. As we got into Thursday, Friday of last week, you can see the 9-day was starting to assert itself as resistance. And they did a little 3 o'clock in the morning, rug pull down to the 32.47 area. They bounced it a little bit since then, maybe 10 handles or so. I would expect it to go back and deal with those lows as we get into the regular session. But Europe came in and they completely dumped it. They had taken it up into the 33.25 area before that, and they just, but this stuff happens in the S&P. 3 o'clock in the morning, East Coast is asleep. Hey, guess what? Here's 60 handles. I am flat. I didn't trade it last night. I wasn't around. Didn't trade at 3 o'clock in the morning because I was asleep. So we're flat, and I'll probably stay flat the next couple hours into the open, and then we'll see what the day wants to do. Friday was a decent trading day, kind of whippy and sloppy. It was one of those days where you hit some big trades and then you take some paper cuts in between, at least for me. The inflection points were really nasty. And we said at the time in the room that it was all, it was a pretense to a bigger move. I was just kind of hoping that the bigger move wasn't at 3 o'clock in the morning, but sometimes it is. Does that mean we're done? I don't know. I stopped trying to figure that out a long time ago. What the Bulls are going to have, or the Bears rather, are going to have to overcome is that the last time we went down and touched the lower Bollinger Band, they didn't really want anything to do with it. They took it straight back up to the middle Bollinger Band. So does this turn into a lower band ride? I have no idea. There's certainly the opportunity to turn it into a lower band ride and have kind of a down week, at least a down beginning part of the week. A lot of that depends on what kind of resolve the Bears want to put behind this down move. Hourly chart, your new weekly pivots there, 33.39. You can see that there was a weakish attempt at the hourly mid band. Nothing, it hasn't even approached weekly pivot. It's just one of these things where we just bled down. We just bled down overnight, and we'll see now if they can get it back. If they start to do a spike rally, then how hourly mid reacts, how 3300 reacts, and if they really get going, maybe not today, but midweek, how weekly pivot reacts, all going to be very important. Very important. You've got the 100-day exponential moving average sitting underneath at 32.06. If we keep moving down, but today is really all about: do the Bears have any resolve? Do they have follow through? Can they continue to press? The answer to that question is usually no. But when the answer to that question is yes, we tend to get some bigger pushes in the tape, which I think a lot of people have been waiting for. But like I said all along, I think ultimately it's a buy. Don't get caught out over the tips of your skis on these shorts. Take your profits where you find them. Let the runners work. Roll it down. And just understand that when the downside, when downside price levels stop working, you have to adjust. You have to adjust. Don't fight it all the way back up. I'd rather you be long or get out of the way. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I will talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.